Hi everyone, I'm not in London. I'm in Music City, Nashville, Tennessee. And you can see behind me on Broadway, they've actually just shut the whole street there for a soundstage for some band to do its thing. It's a tremendous city, one of the fastest growing, if not the fastest growing in the US, and a lot of fun. So I'm here for a couple of days on an off-site kind of thing. And it's fun to be here. I'll be heading back to Brooklyn today. In oil, there's been, as usual, a couple of major dramas. Not so much in the oil price as such, but when I was in London, I think last Thursday or Friday, I opened the Daily Mail, which, to my shame, I read for the gossip. And top story was a major explosion at the El Segundo refinery in LA, which was dramatic and worrying to me because I was there only 2 or 3 weeks ago with the management of Chevron. Thankfully, it seems there were no fatalities, and it seems to be a relatively controlled explosion that mainly affects jet fuel production at the refinery. But of course, California is a highly jet fuel intense market, and El Segundo is huge for supplying LAX. So there's been drama in California margins. California now only has 5 major refineries left, so they really can't afford these kind of upsets. And it's really a function of California government policy as much as anything. They've done a great job of substituting, for example, diesel for renewable diesel. But the reality is they remain highly dependent on oil, and they've over-regulated their refineries out of business. So when they get a major accident, it becomes a drama for local prices. And that's not all. We had an upset at Big Spring, Delek refinery in the Permian, which is about the biggest refinery in the Permian, which is also worrying, but thankfully, again, no fatalities as far as I know. And a couple of major maintenances on major pipelines, Kinder, One Oak, have also caused drama in local prices for the US natural gas. So Waha Hub has gone aggressively negative US gas prices, which is fascinating when you think about how energy short we are thinking we are in terms of AI electricity and how likely that will be met by natural gas. To have negative, very negative prices in Waha underlines that there's a major problem with US energy infrastructure. And so we like companies. A good one, I met the CEO recently, is Williams. He was impressive. And we've been liking that theme for some time now, to buy US energy infrastructure in general, of which refining would be a component part. So that's the big oil dramas of the week. But also, of course, we've had a big drama in gold prices going through 4,000. Silver, etc., all ripping, Bitcoin, but the gold and that, all those elements are very concerning ultimately, because they tell you there's a horrible problem with government finances and paper money. And the fact that gold is acting the way it is kind of scary, and that will be not a bubble in gold, but a bubble in debt markets that we're basically waiting to pop. But as George Soros would tell you, when you see a bubble, you rush in. So everyone's rushing in to make these bubbles bigger. And of course, incrementally, what you're also looking at is a major AI bubble. Really a lot of circular dealing here between the chip providers, the software providers, all buying off each other and selling to each other. And that again is a major bubble, which, it's really difficult to see how AI is going to generate the kind of revenue that is implied by so many of these stocks. It's become a meme story. So one example is Oklo, a small nuclear reactor stock which doesn't have any small nuclear reactors, but is highly dependent on government subsidies, etc. I mentioned it to my son at 27, and I think it went to 160 in about, well, let's call it 4 months. And if you look at, for example, one example that we hold up is the UAE building a nuclear power plant, a major nuclear power plant, which is interesting because the UAE in the Middle East has no environmental lawyers, no environmental protesters. It still took them 15 years to build a major nuclear plant, and that came in approximately 50% over budget. So the idea that this infrastructure to meet AI is going to be easily added by just sheer weight of capital is completely misguided, and that becomes almost a worse bubble than the government finance bubble. So that's been pretty interesting. One thing that's not acting well is crude oil. There's actually low volatility in crude right now. See a lot of people arguing. It goes up a buck and all the bulls go, I told you so, I'm bullish. And then it goes down a buck and all the bears say, I'm bearish, and I told you so. which is sort of absurd because we're actually in just a declining channel with low volatility. And you can see that there's limits on how much volatility you can expect in oil. Firstly, we tested oil this year with Israel bombing Iran and bombing Qatar for that matter. And yet we haven't seen much incremental volatility outside those events, not even any around Qatar, but some around the Iranian attacks that almost immediately dissipated. And you can argue that we're in a declining channel here where if the oil price goes too high, presumably China, which has been a huge part of keeping oil prices higher by inventory building, a lot of people talking about how China is now adding even more inventory capacity and therefore will continue building inventory. That sort of tempers the market when it's an inventory build, because if the price goes too high, presumably China will stop building inventory, Saudi will increase supply, and if the price goes too low, presumably China will start building inventory and Saudi won't add as much supply back in. So those who are in a frenzy arguing for bull bear might be just wrong insofar as not much happens but a gentle decline, and that's pretty much where I'm at. On the stock side, company side, there was one particular story for us over the past week, which was Oxy selling its diamond asset, OxyChem, to its biggest shareholder. And that, of course, would be a related party transaction. So Warren Buffett managed to buy OxyChem from Oxy for what looked like a pretty low multiple in what is, by definition of the SEC, a related party transaction. But we haven't really seen a satisfactory disclosure of who gave the fairness opinion on that deal, because we don't think it's fair for the remaining shareholders. And we've basically called for the board to be fired on this. There's a couple of major additional issues that weren't really picked up by others. One is that OxyChem, in the deep history, had a major environmental issue at the Love River, round about Chicago, and that was a huge environmental liability for OxyChem. Oxy also had a disaster, and this is all back in the 80s, at Piper Alpha, that remains the world's worst offshore disaster. 167 people dead, I'm so sorry to say. In the deal with Buffett, Oxy decided to retain, they didn't decide, I don't know who decided, probably Warren, that Oxy would retain the environmental liabilities of OxyChem while selling it for a cheap multiple. And that we thought was just an appalling deal. And to keep it simple, we started the note by saying the Oxy board should be fired. So that's all that. Apart from that, welcome to Music City. I traveled a lot in the US over the years, used to travel intensely. And I always used to love listening to Willie Nelson. My road song wasn't actually On the Road Again, which would be the obvious one. It was always Me and Paul. Paul was his drummer. And like all great country and western songs, it has a fantastic story behind it. I thoroughly recommend you listen to it and look at the lyrics. And of course, Willie as well is gone. So he's still around. Back there is the Country and Western Music Hall of Fame. And of course, Willie is a key person on the pantheon of this wonderful thing that's called US Country and Western. Alex, gotta have energy, man. Hope you're all well.